Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar extends its advance since Friday through 68.25 and now presses the level of 68.60. Above here, stop losses are seen. I do anticipate a break would give us a squeeze up towards 69 figure 25 before turning around. So it's more about the fact that the shorts will be squeezed out as we get towards this rejection area. Also on Friday, the Australian dollar seemed unfazed as further evidence emerged that the Chinese economy is slowing. The pace of growth in the world's second largest economy slowed its lowest rate since 1992. China's economy grew by just 6% in the third quarter. Now, this is the slowest, as I mentioned, in 30 years because the recent numbers we've had is that we had 6.4 in the first quarter and 6.2 in the second. So with this 6% now does give some concern. There is no data scheduled today. However, China will release its housing figures later. Last week, the RBA may have something to think about now after the Australian employment figures come out. And the fact is that we missed the forecast of 15,300 and inked in a low of 14,700. The unemployment rate fell marginally by 5.3 to 5.2. So as I mentioned, it is possible that we will see the squeeze here because like last time, we squeezed all the way up and then gave it all away, close to that 69 cent. That's where I want to start feeling the market will get short again and see if we get a pullback with 68.35 as minor support and the trigger lever to abandon this bullishness at 67.70. Well, the euro is also squeezing higher after the dollar index tumbled further and to a fresh 7-week low of 96.88 or a 7-week high in the euro at 111.70. The market was triggered after last week's announcement that the UK and the EU signalled a victory on a possible UK's departure from the Union, or the divorce in the Brexit, that is. But nothing seems to have come out of that after the super weekend Brexit meeting event that Prime Minister Johnson, at the very last minute on Saturday night, asked for Europeans for a Brexit delay until the end of January 2020. Now, he has said all along that there was not going to be a delay beyond the 31st of October. So this has all changed, like a lot of things do. So let's see how that all plays out. At the moment, with the resistance level taken out of 111.15, it could see a squeeze now. All the shorts out up towards 112.15 before turning around. We are overbought. We are trading slightly, but to the downside, a couple of levels come into play at 111.15 minor and the trigger level at 110.65 to abandon the bullish case. One factor is that dollar yen no doubt will have a lot of trouble in trying to rally. Purely for the fact is that the uncertainties that are out there in the moment are very, very high, and the market no doubt will return to safe haven demand. So therefore, yen strength should return, and since the failed challenge above 108.60 looks towards its trigger level, it was briefly taken out but not closed under there as yet. We have to wait for New York. 108.40 was the trigger level, but we have breached because 108.28 has been the low, but we need further confirmation to the bear case, and if we do see that, then we are looking down towards the region of 107.85 to 107.15. Well, the pound has been very, very erratic over the last 7 days, and I still have a little much to say to the view on where we can go due to the volatility, the uncertainty, and with the fight that continues on between the Democratic Unionist Party and also with the EU and also with the UK. Very hard to put any kind of suggestion on where the pound can actually go. We can go to 132 or we can go back to 122. The market is very whippy and very hard to trade in these great ranges that we're seeing at the moment. So I'd rather sit out and be neutral. Gold, however, has got a lot of work to do. And you can see here for the last 3 trading days, that is, we've been trading sideways. At present, the trigger level to the bull case is around 1,514. A break above there gives me a target of 54. That's what I'm waiting for. We've still got bullish technicals and a little bit of divergence from the MACD. Does suggest that the weakness is not likely to play much below the region, and it's wide, as I mentioned, that the base is around 1,460 to 1,476. Oil, well, also trading a little bit to the sideways, but still bullish, as the MACD is still married up to the RSI. I'm still looking for $56 to maybe 57 as a target. And as long as we maintain above 52.65 and the base holds around 50.5 to 51, then I'm still bullish for oil, and it most probably will come into effect eventually in the next few days. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report and hope you enjoy the great start to this new week.